understand when we're talking about return on investment is that when we're going into the US market, we're actually looking for a particular kind of growth. There's two kinds of growth that I'll describe. So there's natural growth, and then there's growth as a result of a return of market confidence. Now, natural growth is what we understand here in Australia to be just growth from, the economy doing better, people's incomes going up and so forth. And here in Australia, we predominantly experience natural growth. What's happening in the US at the moment is that the property market is in a complete shambles, and really the reality is that stability must return before natural growth will return. So over the next 3 to 5 years, the expectation is that when we see a return of market confidence, when we see a return of stability, then we're going to see an increase in price. But it's going to be more about growth from return of market confidence, not the natural growth. So what we want over the next 3 to 5 years is we want people to come back into the market. We want all the initiatives that the government have started in trying to encourage people to buy their own homes again to start to take effect, and we want to be able to recover any monies in terms of current market value over that time frame. Now, the bottom line here is that nobody has a crystal ball. People who are expert in the market, who study this stuff every day, have a lot of support and evidence to indicate that that 3 to 5 year time frame is probably quite realistic. But again, you've got to go into this market understanding that it is an estimate. Now, the wonderful plan B that we've got with all of these property purchases is that we're not going to die in a ditch if it doesn't happen in that time frame. The fact is that predominantly the sorts of properties that we are looking at are going to be earning us a good income stream while we're holding them. So they're going to be cash cows for us in the immediate future and into the medium term. Now, you've got to understand that market confidence is complex, and even if market confidence returns, it has to be accompanied by liquidity. The two go hand in hand. There's no point in the US population suddenly feeling better about the housing market if the banks don't ease up and actually start releasing money to people so they can start buying again.